Financial Planner. Follow us on YouTube.
The IMF is pushing the media to play up their warning about the collapsing economy. Let's get into the economic collapse financial news. Now, we're starting to hear from many different financial pundits, economists, that the economy around the world, the global economy, is not doing very well. And we understand that the central banks, they have been pushing their agenda by creating a lot of currency, keeping the interest rates very low, and they've done all they possibly can to keep us in this illusion, but it's breaking apart. And we can see that there's a German financial analyst, Mark Friedrich. He's out there saying that, listen, the European Central Bank, if they continue to keep its monetary policy unchanged the way they're doing right now, it's going to be disastrous. Keeping the interest rate at 0% and pumping money into the economy would only further delay of a collapse of the European financial system. And we see right now that this is all the central banks are doing right now, because they cannot do much of anything else. They can't really raise interest rates. They can't lower interest rates further. All they can do is create currency, keep everything the way it is, unchanged, and hopefully they can blame this entire collapse of the system on someone else. Now, he's out there saying that the current policy is expensive, as the central bank is trying to buy time to keep the money carousel going, and all at the expense of the people. And according to Friedrich, the central bank should have ended its QE program by December 2017, but as we know, they extended it to 2018, because if they stop it, guess what happens? The whole thing just completely falls apart. And this is what we're seeing. Now, Friedrich is out there saying, listen, there will be an extra 270 billion euros and then 2 trillion. And we all will be responsible for that. The ECB is getting more and more reckless, and this only delays a collapse. First of all, in an attempt to save Southern Europe countries, including Italy. I see no good in this policy. The interest rate remains zero and will remain at this level in the future. He also underscored the economic growth is still sluggish across the European Union, and it doesn't look like it's going to get any better. Now, we understand this. We've been following this for a very long time. Other people now are coming out and saying, yeah, everything they've done really hasn't done pretty much of anything except keep us in this illusion. Now, most of the public right now here in the United States, they think everything is doing okay. They think everything's fine, everything's perfect. And right now we can see American consumers, well, their optimism, their confidence is at the highest point since the dot-com bubble. Now, this is back in 99, 2000, going into 2001. Now, the dot-com bubble was much higher than it was back in 2008, 2007, 2008. And we're reaching the same exact point. And people really do believe that everything is going to be okay. But there is one little hitch to this whole thing, is that they don't feel the job market is as strong as it should be. Now, of course, they're out there telling you that it's low, 4.2% or something like that. And this is kind of strange that the people think that the job market isn't strong. Well, they're realizing this because when they lose a job or they're trying to find a different job, they can't find the same pay, they can't find the same job, and many people have lost their job. They only can find part-time jobs. This is why this is a huge problem. Now, while they're telling us that everyone is completely confident in the economy, we see retail. It's completely deteriorating. Stores are closing. People are losing jobs. Corporations, their revenues are terrible. Look at Under Armour right now, down 75% from their highs, and they're cutting their outlook. Why? Because their revenue has dipped by 4%. And this is the first decline in revenue since it floated in 2005. And what we're seeing right now is that it's starting to hit all these corporations. None of these buybacks and none of these things they can do will ever mask the revenue, the sales that they're bringing in, because you can't really fake that, because revenue, sales, that's all there is. Earnings you can fake. And it looks like a lot of these companies, there is a huge amount of problems, and they're starting to report that, yeah, sales aren't what they seem. And a lot of companies are out there saying that sales aren't good, and we're seeing a lot of stores doing this, and this is why they're going bankrupt. We see the Chicago PMI, and now this is the Chicago PMI survey. It has surged like we've never seen before. Now, this doesn't mean this is the hard data. We've seen this before. This is an estimate. And what's very interesting about this estimate is that employment fell and the direction reversed, and it signals a contraction. So the hard data is going to probably most likely show the opposite of what the survey is showing. Now, we know that the Trump administration, they're going to be unveiling a huge tax reform plan. And if we look at the details of the plan, we see that the focus of the entire thing, the whole tax reform, is on corporate tax reform, with the notion that an employer will somehow pass on their savings to employees via raises. We know that's not going to happen. First off, while the phrase corporate taxes is a great political prop, the reality is that nearly 50% of large corporations pay zero corporate income tax. In 2012, the Government Accountability Office performed a study in which it discovered that 43% of companies with 10 million plus in assets pay zero corporate income tax. It's not as if the other 57% are picking up the slack either. It is well known that the large corporations go above and beyond to avoid paying the full required tax rate. Why are they giving a tax break to corporations? Why aren't they giving it to the everyday person? Well, this would be a problem if they started a discussion about individual tax reform, because that eventually leads to the elephant in the room, and that's entitlements. That's why they're staying away from this. The other reason I believe they're going after the pushing the corporate tax reform is because when the system falls apart, they're going to need to help the corporations, because most of these corporations are going to completely collapse under the weight of the economy breaking down, because their sales, they won't be there. Their earnings and their buybacks that they've been doing, the fake accounting data that they've been putting out there, it's all going to hit them. And it looks like what they're trying to do is they're trying to create this bailout type of program that will eventually help the corporations when the entire system falls apart. And it looks like that's what they're trying to do at this point. Now, the U.S. currently spends around 65% of its budget on entitlement spending. This is why they're not going to mention anything about individual tax reform. That's why they're going after their corporations, and there's other reasons. Nearly half of American households receive some kind of government assistance today. Those households that do pay taxes cover only some of this. And the other comes from the borrowing of the government, where they borrow money from the Fed. And we see right now that at this point, the tax receipts coming into the government is not even enough to pay for this debt. If the interest rates move up just a little bit, the whole thing just completely comes tumbling down. They will not be able to pay for anything. Out in China, we see the Chinese yield curve has now been inverted for 10 straight days. This is the longest period of inversion ever. And this is a warning that something bad is headed our way. And we've been seeing a lot of this. Now, what's very interesting, and we mentioned this a couple of reports ago, the IMF came out with their global financial crash scenario, and they highlighted a certain area where there's going to be problems, and they're predicting some type of collapse in the system. This week, the IMF has gone a step further. What they're doing is they're going to the mainstream financial media to publicize its warning about the dangers of historically low volatility and related short volatility strategies. And what they're doing is they're wanting the corporate media to push the idea that we're going to have problems in the future. And this is exactly what is going to happen. And it looks like they're broadcasting all of this, and they're letting everyone know that, yes, we understand that the economy is not doing as well as we thought. We understand that we're heading for this global crisis, and we want everyone to know about it. Now, the question is, why are they doing this? Why do they want the corporate media out there pushing this? Because, again, what they're going to do is they're going to try to blame another group, another person. They don't want the blame for it. So if they come out with their warning, the corporate media, as we can see, as we've been reporting, they've been talking about the stock market, how it's overvalued, that something might go wrong, they're black swans. They're talking about how the economy isn't as strong as we all think. And now the IMF is out there And they're courting the media to push that agenda. And they're doing this on purpose because they want this information out there. Because the central banks, they always have a plan. I mean, we hear all this talk about, cryptocurrency and how Christine Lagarde is all for Bitcoin and how they like the cryptocurrency. Well, think about it. The central bankers, they've been dying for a digital currency. They don't want cash. I mean, right now they do have a digital currency, but it's also in cash. They would like to get cash out of the picture. Why? Because this way they can control everything. If they move to cryptocurrency, they have full control. Now, people say, well, this is decentralized. Why would they push a decentralized system? No, they're not pushing Bitcoin by itself. They're not pushing Litecoin or Dash or any of that. They're not trying to take control of the entire blockchain system. What they're trying to do, just like they did back in 1913, and even before this, they want control of the creation of currency. They want the governments to sign on to a coin that the central banks control. Yes, there might be other cryptocurrencies out there, but just like today, there's gold, there's silver, there's cryptocurrency, but the only currency that can be used here in the United States is the dollar, and many of the countries have their own currencies where the private Western central banks control it. Just like in Europe, there's the euro, and they want you to use this because, again, this is how they make their money, because the government borrows from the central banks, and the people have to pay the interest on the borrowing, and this is where taxes come in. So what they really want to do is they want to create a coin, and they want governments, and they're going to be in their next step, they're going to want them to pass laws saying this is the official currency of the country. And each country most likely is going to be forced to do this. Now, is this going to work? We don't know. And if the central banks get control of this and force us to use this coin, guess what? They're going to create this out of thin air, loan it to the government, and the people will then use this digital currency. Yes, it will be decentralized. They'll have their servers all over the place. And once again, will be under their control. Now, on the other hand, we need to say, listen, we don't even need you. Why would we need a central bank to create a currency when it's already been creating on its own? So what we need to do at this point is once the system starts to reset, once we go through this collapse scenario, which they're already calling for, we need to push the idea that we don't need the central bank. And the only way to do this is for businesses to start accepting Bitcoin, Dash, Litecoin, whatever cryptocurrency it is. They need to accept it. People need to be paid in this cryptocurrency, and we will then bypass everything the central bank is doing. And they can't tax this money because it's not a Federal Reserve note. We're dealing in a completely separate currency. And I believe this is the direction that the people need to go in. Now, the central bank doesn't want this to happen. They were a little bit late to the internet, where the cabal, the establishment, they thought it was a joke. Social media was a joke. They didn't realize how powerful it was going to get because they thought they owned the corporate media, the 5 different companies or 7 different companies, and they just passed around the same exact story to all these different areas. And they thought, the internet, that's not going to do anything. Well, they learned their lesson. They realized they should have got into this way ahead of time and controlled the internet, and they wouldn't be having this problem today. So they're looking at cryptocurrency. We know it's not that big, and what they're trying to do is they're trying to get on board before everyone starts to realize what cryptocurrency is, because a lot of people don't know what it is. A lot of people don't own it, and they're trying to create and pass laws right now where they can control it. Now, I'm not saying it's going to work. Hopefully it doesn't. Hopefully the people say no. Hopefully those people in the crypto market say, we don't need the central bank. There's no reason for it. But again, we have our government idiots who might go along with it because they'll be paid off somehow, some way. But we can see as we go through this major collapse scenario, the IMF is already pushing it out there. We already know because we've been tracking it. We need to make a decision at a certain point in time because there will be a reset. There's always a reset. There's always a new currency. And we're headed to this period of time. So get ready, get prepared, and we need to band together when this time comes.